Hello and welcome to India Market Open. It's the last day of the week, but also the first day when big earnings are flowing in, reactions are happening. You're off to Davos, but just before you leave, we decided to make it busy for you.
Thank you. Great to be here, but it was a great day of trade to Samina yesterday from the global perspective before we come to local, because very choppy post-USI CPI inflation, but they recouped. I mean, yields came off again from the highs and the markets clawed back.
We know, Neeraj, talking about global markets, and I want to talk about India for a quick minute. All through this week, what we've seen is what happens on India in the first hour of trade is exactly the opposite of what happens in the last hour of trade. So if you start off positive, you're more than likely going on flat or negative, and I guess vice versa too. At least that's been the texture so far. But yeah, like Neeraj said, global markets clawed back really well. Inflation was more or less in line with what the street was expecting. But let's start with what's happening first up in Asia this morning. Largely, Asian markets are trading flat to slightly lower. Japan is turning out to be such a surprise. It's seeming to keeps adding gains day on day, week on week. Last year was one of the best performing markets. This year so far as well, turning out to be quite a stellar run-up for Japan. It did see a gap up of 2%. It's off the day's high point as we speak, but still looking really good with a gain of about 1% on. Chinese data is awaited in terms of inflation and trade. That could be one reason why Chinese markets, or Hong Kong and China, both are trading on the sidelines this morning. U.S. equities, on the other hand, after having a choppy day, like Neeraj said, finally went home on a flat note. The Dow, the Nasdaq, and the S&P 500 pretty much eking out not too much, but recouping from the day's low point. CPI for December was largely in line with expectation, a 0.3% jump in prices in the month of December. Annual inflation still remains at 3.4%. Prices, remember, are driven by shelter costs, so you want to keep that in mind. No major surprises on inflation data so far yet. A little bit of bad news that came in for tech companies was layoffs. Google's parent company Alphabet has indicated that they're going to lay off several people over the course of the next couple of quarters. Amazon's Audible division is looking to cut 5% of its workforce, and Discord, which creates the language for gaming apps, is also indicating that they would be looking to lay off 17% of their workforce. So all of those things could be denting sentiment over the course of the next couple of days. We'll talk about tech in a minute with Neeraj as well, but quick mention, may or may not be of any relevance to you, but Bitcoin ETFs launched on the Nasdaq. Big debut there. Prices have skyrocketed. It almost seems like small steps, but this is getting legalize, normalize. The fact that it's now on the exchanges is a big, big leg up. So you may see some volume moves as well on Bitcoin over the next, or cryptocurrencies as whole, in the next couple of weeks to come.
You've almost been rooting for this.
Have we?
No, you in particular. I'm saying you've been tracking this very closely.
I mean, tracking it as much as I can, but yeah, I think I'm just trying not to be a naysayer on this one, right?
Yeah, most certainly.
And geopolitical stress, that's the unfortunate part. Yemen continues to be a sore point. US and UK have actually shot out missiles at them. But Neeraj, it's all about IT. The ADRs, Infi was up 5% post-earnings. TCS wasn't doing too badly either. I'm almost beginning to think that no news is good news, and that's why we are celebrating. Brokerages also don't seem hugely disappointed.
Yeah, and Samina, remember we spoke about it in the week ahead that the Mr. Market knows it best, and we were thinking, why is it that the IT stocks were doing what they were doing? Now you probably know the reason. In some sense, there were some positives here.
So this is what I want to ask you, and I don't know if you think differently, right? We have all talked about how BFSI could be the leg up. There could be some clarity the minute you get the first rate cut. The reason you have a rate cut largely is because an economy is slowing down. If an economy is slowing down, you anticipate spendings come off. I don't know why we are looking at this differently when it comes to IT doing well if there's a rate cut, which also means an economy slowing down.
Yeah, or could it be that if the market's pencil in the economy being a level X, maybe the economy will not be so bad, slightly better, and therefore discretionary spends may not be as bad. I remember, so just before I moved to trade setup, I remember last year in Davos, C. Vijay Kumar of HCL Tech mentioned that the mood going into December was so gloomy that when the first 15 days of January, when he met people and clients, etc., he suddenly felt that, hey, things are not as bad as December were indicating. let's say it'll be interesting to talk to all of them.
And you will be talking to them in Davos.
Yeah, and Sajid will be talking to Krithi today. So I think it'll be very interesting.
Yeah, it's interesting. It's turning out, or rather playing out. We saw some buying in IT as well. So I think the worst may be behind it. It's in the price, but we'll see as the day goes along.
Yeah, so that's a piece about the option trade setup as well. Something that actually, something that Samina has spoken about, and that's just the options data now shows that if you look at the writers, both on the call and the put side, it seems that they're bracing themselves for a very tight range. Both the put and the call side, the maximum OI at 21,600 to 21,700. So that's the very narrow range in which people believe the Nifty could be at. At least that's the option bet that is there as far as the Nifty goes. So that's part one. It's a key day for Nifty IT. 50% of the weightage of Nifty IT has delivered small positives in results, and we'll talk about them. Maybe you could argue that no bad news is good news as well, but there are small positives there. And, between the two, that's 50% of weightage. With the other two coming up later today, that's 70% of Nifty IT weightage having come out with results. If they turn out good too, then you don't have a reason to complain for IT at least for this quarter. And that's a big leg up. That's about 14-15% of the Nifty weightage as well, which is not started off that poorly, which is actually a big thing for the Nifty. We need the index numbers to look okay at these elevated levels. From a trading perspective, 13 stocks still in the F&O ban, and cannot not talk about Polycab. We'll do that as well, but Polycab is now in the F&O ban. And I think we'll talk about that in detail in a bit later on. But watch out for the fact that so early in the series, you're having so many stocks in the F&O ban. Usually it happens during the last 4 or 5 days. But now, since the last 3 days or 4, we are seeing so many stocks in the F&O ban. So that's interesting. Didn't find something special, Samina, in the FIDI data, to be honest, but a lot of stock-specific moves as well.
Indeed. But just before that, Niraj, if you look at the last 15 days, the Nifty actually hasn't done anything. We're down 0.2% from the 1st of Jan to the 12th of Jan already. And may not be such a bad thing. You don't want to go into the earnings season with very heavy positions. So what we're seeing is that, like Niraj said, tight trading range, 21450 on the downside, 21750 on the upside. We've really seen support and resistance largely at those levels. But it is going to be all about Infosys and TCS. We will talk about that in a minute. But a few other stocks that we should mention before we go into the deep discussion on tech and Polycab. Handful of them. Nykaa will be in focus this morning. Watch out for Nykaa. They've got a big block deal that could take place right as soon as the markets open up for trade. Should be an important one to track on Nykaa. You've also got, and of course, the tune of sell or the block deal stands at about 490 crores. So watch out for this one. The stock was up 2% in trade yesterday. I'm adding two more stocks to that before we move on. Capside, I've talked about this for the last few days. The stock has been fairly active. There have been a few order wins. There was talk about a board meeting. Confirmed information coming in now. They will be meeting shortly. In fact, they have met and they will be raising 200 crores through a QIP. The issue price is set at 251 rupees, which comes at a discount to yesterday's close. Well, that's Capside Infra for you. Strides Pharma, their step-down subsidiary, has agreed to sell 100% stake in Iris Pharma for 200 euros, so 200,000 euros. So this again could be significant. You might see a little bit of a cash flow movement. I don't really know what the revenue contribution of Iris Pharma is to the top line of Strides Pharma, but the stock is one you want to watch out for in today's trade. Along with that, AG Infra, they've been declared as L1 bidder by Central Railway Project for 715 crores. So this could see a big bump up on back of that order win. But Niraj, Polycab, 20% down, 15,000 crores of market cap wiped out. No major commentary coming in. It all seems like it's a haze, and it'd be interesting to see whether the markets can differentiate Polycab from others, right?
Yeah, it'll be interesting to see that for sure. And I know Moshe Katri is waiting. We'll get to him in just a moment when we deep dive into IT. But Polycab is interesting because it saw 114% uptick in OI in trade yesterday. It's important to highlight that because this was the stock of yesterday. Arguably the stock of the week. This is massive uptick, and therefore it's in the F&O ban. But if you just look at the cash volumes as well, obviously the trading volumes were much higher, but the cash volumes for Polycab were almost similar to the 5-day averages, which means the quantum of trading quantity went up, but an equal number was delivered as well. So some serious delivery-based selling seen in Polycab yesterday. The small cap world fund sold about 8.5 lakh shares as well. And the reason I say it's delivery-based selling is because the stock trended lower and ended at the lowest point of the day or thereabouts. Now, quite reverse for KEI Industries, by the way. This is the Polycab chart. Quite reverse for KEI, that's the peer. And that actually started off lower sometime in the day and then ended higher. So it saw some buying at lower levels. The delivery volumes were 3.5 times the 5-day average. So the market made a distinction between KEI and Polycab. Based on the news, I would say thankfully, because KEI is not suffering from the news flow that Polycab is suffering with. So that's part one. It'll be interesting to see what the trading pattern is today and whether the market likes it or no. Just clarifying, the rumors floating around one large Mumbai-based fund having put out that note, that was wrong, so keep that in mind. The other one, maybe Samina spoke about Ugro Capital, but there the Q3 update was strong. AUM at about 8,300 crores, up 60% YOY, and the gross loan origination at 2,800 crores, up 50% YOY. And TARC too, 4,000 crore project for TARC for the company of its size is very, very interesting. Lastly, IT. And before we get to Moshe Katri, it's important to highlight that we'll get his views on what the IT stocks have done or what the IT stocks have delivered. But Samina, I thought the HSBC note put it very well. A bit of positivity, slight top line beat, decent deal wins, nothing spectacular, and margins too not that bad, especially TCS, which actually did pretty okay.
I think my only concern is that every reporter said they're still non-committal.
Yeah.
So the outlook is still, there's no clarity. And I think the lack of clarity is what's making most people, or has, worried most people. But the fact remains that the ADR was up. Very, very good chance both these stocks will open the gap up this morning. But who better than Moshe Katri, who's tracked the sector for decades together, is joining us this morning. Moshe, a very good morning to you. It's interesting. Everything seems to be in line. And for TCS and Infosys both, no news seems to be good news. And we saw that in terms of the ADR reaction on Infi, specifically in overnight trade.
Good to be here. I would say a lot of this is what I would call better than feared. We entered the print with some negative sentiment about December quarter margins, given the fact that some of the companies implemented wage comp increases during the quarter. There were concerns over furloughs. How would that impact revenues? But I would say that the bigger surprise, I would say, in terms of better than feared, has been the margin numbers were probably better than expected. And then on top of that, the bookings were not spectacular, but for a December quarter, and given the fact we haven't seen any major announcements intra-quarter, they were actually pretty decent. For example, for Infosys, I think about 70% of the deal wins came from new logos. That's a pretty impressive number. So I would bundle this in that, category of better than feared. You have to make some sort of a call about the macro and the global economy. When we were in India in December, we were told that enterprise clients are laser focused on one specific economic metric, which is interest rates. And the common belief was that if the Fed are done raising rates, if we're headed towards an era with the Fed's reducing or cutting rates, this will fuel spending on discretionary work. And I think that's the bet that everybody's making. So we'll have to wait and see. But look, we knew that December is going to be muted in terms of numbers. March will likely also be somewhat muted. And at this point, you're really expecting some sort of an inflection point starting in the June quarter. For some of the tier one offshore vendors, you've had a very large, very successful calendar 23 in terms of new bookings, which is what we call the cost takeout side. And these should start converting, and I think that will translate into better growth starting in June.
Let's take this one at a time, and I think you're right. The street was so nervous that they've actually maybe in some ways under-promised, over-delivered, if you want to call it that. Let's take one at a time, and I want to talk about TCS because we did see margin expansion there. It was a standout, in fact, at 25%. Things seem to be looking okay on back of lower subcontract expenses, which are now down to pre-COVID levels. And of course, there was some forex gains as well. Now, on the margin front, before we talk about top line and geographies, how sustainable is this margin? Is 25% doable? Is that a given over the next couple of quarters? Because a lot of the gains potentially could have been one-off.
Yeah. The biggest headwind to margins in the past few years, with the exception of calendar 23, has been wage inflation. So ultimately, you have to assume, we're assuming somewhat that wage inflation will continue to be relatively subdued throughout calendar 24. And until the end of the year, we should be in decent shape. Now, the other thing that plays a really important role here, it has to do with the firm's pyramid structure, recruiting. Are we focusing predominantly on lateral hires? Are we focusing more on college campus recruiting? And it seems that throughout the pandemic or after the pandemic, companies have done a really good job in terms of reorganizing their pyramid structure, i.e. reorganizing their costs and optimizing costs. So at this point, it seems that the margin numbers seem sustainable. I would say that despite the fact that many investors are worried that as some of the deal flow starts converting, this could result in some sort of a margin headwind because of ramp up costs associated with starting a new project or converting some of those large deals. But again, I think these companies are in a great shape in terms of sustaining their margins despite some of the near-term headwinds, because from a big picture perspective, the largest contributor to this margin headwind would be wage inflation. And I think at this point, it's still pretty subdued, at least for the next, 6 to 12 months.
Let's talk about top line and contribution from BFSI. I know for TCS that came in at about $2 billion or dollars, but large deals are still not coming through as swiftly as we've seen historically. And more importantly, you've got elections. Could that, apart from, of course, the rate cut situation, do you think a large part of the large deals will only start flowing in post-elections, which means I'm pushing this up to calendar year 25?
So the deal flow, we knew the deal flow has been converting at a very slow pace. In fact, that came through from many of the companies 3-6 months ago. They were winning deals and clients were basically telling them not to fully ramp and possibly wait until the beginning of calendar 24. We don't really see any relationship between the November elections and the actual conversion rates. I think a lot of this is a function of companies feeling comfortable with the macro and feeling comfortable with the fact that these are very large, complex engagements, and they had to get set up for that. And by nature, these deals take longer to ramp. So again, I think we'll start seeing that ramp as we speak, January, February, which means that ultimately this contributes to June quarterly numbers.
Moshe, I heard you say that this is better than feared, but is there something that caught you by surprise in either the commentary or the reportage from either of these two before we talk about Infi specifically?
Not necessarily. Both companies reported very early in January. Typically, if we see budgets or calendar budgets typically are ready sometime in mid-January, maybe late January. So you don't have a lot of visibility into the actual budget or the actual cycle. The good news is that when we ask those companies whether we're going to see any sort of instances of budget delays, they're saying they're kind of telling us nothing's changed. There are no surprises. Sometimes no news is good news, right? And I think that's what got people kind of excited that we're not seeing budget delays. They seem to be, the budget cycle seems to be moving, in line, on track, and we should have better visibility probably by the end of January. And again, if assuming this Fed policy continues, i.e., no more interest rate increases, starting to talk about rate cuts, this bodes well not only for the large deal flow, but also for discretionary spending. And that obviously should translate much quicker into revenue growth for companies in the space.
Moshe, what's the call on the stock before I move on to, specifically talk about Infosys numbers like Niraj said? How do you feel about TCS at this point?
We don't officially cover TCS. We cover Infosys just because it's the ADR. We actually like where Infi is. As I said, I think the way to look at it is that you have another quarter with potentially muted growth, but then beyond March, we should start seeing numbers inflecting. And we're not even talking about roughly about $16 billion worth of renewals that will be happening throughout calendar 24. And I think that benefits the likes of Infosys, TCS, and Cognizant. So these are not even in the TCV that we're even looking at. So they should benefit from some of that renewal activity that should carry that TCV or booking momentum from calendar 23.
Right. Moshe, then I can't, of course, not talk to you about Infosys. So why don't you guide us through this? What did you make of those numbers? What are you watching out for into the next few quarters? There was one big deal loss that also happened with Infi a few weeks ago. Keeping all that in mind and all those conversations you've had over the last couple of months when you've been in India, how do you feel about Infi at this stage post what you saw yesterday?
I think the company is executing really well in a pretty tough environment. And don't forget that the company's had a couple of, high caliber departures in terms of executives. So despite that, it just shows you how deep the company's bench is and has been. So they're executing well. The deal flow continues to come through. They have tweaked guidance for the fiscal year and obviously for the March quarter. Doesn't seem anything major. And as I said, I think they're really well positioned for that. For booking activity to continue and momentum to continue. And they have been pretty adamant about their ability to sustain their EBIT margin range. I would say this is probably where there's a disconnect between what management is saying versus what some people on the street believe or don't believe that they can actually sustain that range. They've done a really good job in terms of, I believe they're using McKinsey to help them identify some internal levers in the model. And I think that's so far, it's actually, it's been playing out pretty well.
Moshe, of course, while there's a difference between what the street expects and what you're hearing, those whispers on the street and what the management believes, and like you said, McKinsey clearly advising them on how to navigate through these tough times. What was the standout for you on this one? And do you think we could expect the situation, keeping macros aside and the uncertainty on rate cuts aside, bottoming out? Are you anticipating deal flow to pick up, large deals to start flowing in? And I know while BFSI is the bigger chunk, would it be too naive to believe that the other verticals may potentially start playing catch up? And that could offset the little bit of a slowdown that we saw, the slowdown you're seeing in BFSI?
Yeah, what will offset that slower conversion rate, which is contributing to the slowdown, is an influx of funding for discretionary work. So that could help. The other thing beyond the verticals, it's also the disparity that you've seen in terms of the performance in Europe for Infosys versus the performance in North America. And we believe North America will start picking up. So I think all these kind of different variables should play out and should help you get to that inflection point in June.
Moshe, so in light of all the observations that you have made, I was looking at Infosys. The last 1 year has given a measly 2.68% return, so it is flattish in nature. The earnings growth has largely been flatlining as well. Would you reckon that it's a business worth investing in currently, because the discretionary demand commentary is still missing? So if you're betting on Infosys now, you're betting on, as you said at the start of this conversation, you're taking a bet on some economic factors. Are you taking that bet this morning?
Yeah, as an investor, sometimes you want to be early on certain trends. Otherwise, when you wait until the June quarter, the stock's probably going to move by then. So that's how we kind of look at that. So we like to be early and on some of those themes, especially given some of the deal momentum. And, looking at the history, these deals will convert. And once they start converting, you'll see that inflection point. So, it'll take a couple months, but, we believe this is where it's going to get to. So the industry as a whole went through a very tough calendar 23. As growth normalized, you've had peak growth numbers during the pandemic. Growth normalized in calendar 23, and I think now we're headed towards, you can probably argue that the industry can post growth that's going to be close to 10% on an annual basis, probably fiscal 25, if you will.
Brilliant. Moshe, that's so heartening to hear that you're feeling a lot more optimistic than the last time we spoke to you about Infosys, TCS, and the IT sector. We will, of course, connect back again if you give us a chance over the next couple of weeks while we review the whole IT pack. But great having you on the show. In the meantime,
Good day.
It's expected to be a positive start for Indian markets. Implied GIFT Nifty indicating to a marginally higher start. Remember, about 14% of the Nifty is going to be directed by the tech, and if tech does a pop-up this morning, I think 21,700 should be done in the first few minutes.
Yeah, it could be interesting to see. By the way, just for statistics before we hit that break, the TCS management will be talking to NDTV Profit at 10 a.m. today. We'll do an extended conversation on the demand environment. Our colleague Sajid will be in conversation with Krithivasan, the CEO of TCS, at 10 a.m. today. You definitely want to tune in for that conversation. We slip into a break, but up next, a segment that I look forward to every morning. My colleague Agam Vakil steps in to guide us through the derivative picture. Stay tuned.
Welcome back. You're watching Indian Market Open. But first up, a quick check of the top headlines at 8:30 a.m. this morning. US and UK launch airstrikes in Yemen, and the Iran seizes oil tanker. Oil prices trade flat to slightly higher. December inflation numbers post cold water and early rate cut. Bond yields rise, equities end flat. Infosys disappoints on revenue and guidance, but TCS surprises with better margins, but revenue muted. Bad news for engineering graduates. The headcount at TCS and Infi goes down. Hiring of freshers will take a hit. And Prime Minister Modi will inaugurate the most awaited Trans-Harbour link in Mumbai. Well, those are the top headlines we tracked this morning. It was options expiry yesterday. Today is a brand new day. Tech will be the focus, but Agam is standing by with more on the F&O picture. Agam.
Yeah, absolutely. Tech certainly will be in focus as we move into trade today. But I'm going to start off with the benchmarks. What's happened yesterday was marginal gains coming through as far as the Nifty. It was a very quiet weekly options expiry. That said, when it comes to the futures, at least, we saw about a 2% increase in open interest. But it wasn't necessarily towards longs. That's something that will be determined over the course of the next few days. As far as the Bank Nifty is concerned, the picture wasn't very different. While we did see an increase in open interest as far as the Bank Nifty futures go, well, the underlying, again, remained largely flattish, as you can see. And even in terms of the options market, as far as the Nifty goes, let's talk about that. We did see a lot more writing around the 21,700 calls as well as puts, while indicating some sort of consolidation. As far as the range goes, based on open interest distribution overall, that perhaps has now once again broadened from a 300-point range that we were working with over the past 3 days. It has once again broadened to a 500-point range between 22,000 on the higher end, denoted by max OI as far as calls go, and on the lower end, 21,500. So that's the expected a range we are expecting the Nifty to move within. But this is as far as the Nifty is concerned. We are moving into the reaction as far as your IT earnings go, and I'm going to start off with TCS. So how have traders placed themselves on TCS? The underlying advanced by a little less than 1%, but we've seen about a 4% increase in open interest. And where does that leave us with your options market? Do remember that options market, as far as when it comes to earnings for TCS and Infosys specifically, well, that's where you start seeing a lot more liquidity. For now, we're seeing max OI between 3,800, on the higher end, and 3,700 on the lower end. This also perhaps means that a lot of traders out there have written this particular strangle, considering TCS is bang in the middle of this particular range. Now, this is, of course, to take advantage of the falling IVs after the earnings are announced. And I reckon that a lot of this writing will have come through in the last 15, 20 odd minutes of trade. Let's talk about Infosys as well. And Infosys, as we know that, at least as far as your ADRs are concerned, we've seen a little bit of positive traction there. But we saw unwindings very curiously as far as Infi goes in terms of its open interest, since its futures open interest, even as the spot came off by around 1%. But what is even more curious is that while traders were expecting a range as far as Infi is concerned, TCS is concerned, for Infi, they have in fact gone ahead and ridden the straddle of around 1,500. So they have sold the 1,500 call and they have sold the 1,500 put. And this once again is in order to take advantage of relatively high implied volatility numbers that were ahead of the earnings. Now, we are expecting a significant contraction in premiums, but we can't really rule out a big change in the absolute price as far as these stocks go, which means that they could still perhaps put these strategies off. But it's a wait and watch on that one. Let's keep an eye on TCS and Infosys. Finally, coming down to the other stocks that were also on the radar, we had something like a Polycab and BHEL. Both of them looking at shorts. On the other hand, longs for HDFC AMC, Gujarat Gas, and Torrent Pharma. And in terms of those stocks which are seeing unwinding, we saw a short covering in Bajaj Auto, Birla Soft, Exide, Tata Power and Coforge. All of them looking at declines even as their underlying advance. So keeping an eye on a whole list of stocks out there. But the real question is, what do we do with the benchmark specifically when we know that we are going to have some sort of an implication when it comes to some of these IT companies, at least on the Nifty? And well, what do we do with the Bank Nifty too? Well, we are in conversation with Aditya Arora of Adlytick Research, which is joining us on the show right now. Aditya, good morning. Thanks for joining in. Let's start with your view on the benchmarks.
Very good morning, Agam. I believe markets are in a neutral to bullish zone right now, wherein we are seeing market, actually digesting the stellar gains which we saw in last many days. So they are inching up little by little before the budget. And I believe budget could be a game changer for the market, wherein we can see significant rise in VIX and significant volatility in the market. So I think we are slowly inching towards 22,000. So the bias remains positive. And I think TCS also underperformed since a very long time. So post the result, the patterns look good, the data looks good, and the results are also decent. So I think that would help the market go up. And also heavyweight like Reliance is doing absolutely well, and it's in uncharted territory. So that is adding support for the market. So the bias remains to be neutral to bullish.
Right. Aditya, let's come and talk about a handful of trading ideas. I believe you have one on M&M Financial.
Correct. I have two. I have one on M&M Financial, wherein we'll buy call of 275 strike, which is trading at 10.90, and we'll sell 280 call, which is trading at 8.55. So here also the bias is little neutral to bullish. And the second one is a bullish bet on MGL, wherein we'll buy 1240 call, which is currently trading at 36.50, and we'll sell 1260 call, which is trading at 27.60. So for MGL, I'm expecting 2 to 5% move, and we have created a bullish strategy for the same.
Okay, Aditya, I'm sorry, I'm going to have to revisit your M&M Financial strategy. Can you please take us through that one again?
Sure. M&M Financial will buy 275 call, which is currently trading at 10.90, and we'll sell 280 call, which is trading at 8.55. So the bias is little neutral to bullish.
Okay, so neutral to bullish, which is why Aditya is playing a debit spread as far as M&M Financial is concerned. And of course, while it does have a limited upside, it will also limit your risk, and that also plays out in your favor. This also means that, well, the position is not unlike a futures, but of course, in a futures, theoretically speaking, your risk and reward is unlimited. And Aditya, once again, if you could also revisit your view on MGL.
Sure. In MGL, we'll buy 1240 call, which is currently trading at 36.50, and we'll sell 1260 call, which is trading at 27.60. So here max loss is 7120, but the max profit is 8880.
Okay, so naturally, even in terms of the MGL, with respect to the risk-to-reward ratio, that turns out to be a favorable one. And of course, it has a bullish view. So we'll continue to keep an eye on both these counters. Aditya, on that note, thank you so much for taking us through your views on the markets, as well as giving us a handful of ideas. And with that, Samina, it's over to you.
Thank you, Agam. That was great. Those were a few stocks we need to watch out for, trading in the options and derivative space on the index, and trading calls from Aditya as well. But one stock that caught our attention over the last 2 days has been Reliance Industries. Sushil Choksey of Credit Indus Equity Advisors now joins in. Morning, Sushil. Hi, this is Samina. It's been a while since we last caught up, but thank you for joining us. First up, the last 2 days has seen RIL actually do quite well. It's added, 6.5%, 7% over the last 2 trading days. Is there really anything changed for the stock, or is it stock rotation that we are seeing on the index?
Good morning, Samina. Good to talk to you. Happy New Year to you and your viewers. The entire market in 23 was all about mid-caps and many stories, sector rotation, infrastructure play. And 2024, everybody expects that FI will be back in the market. in a big way to buy India. And if that is a story, large caps, which figure among the 5-6 names, be it banking, be it Reliance, largest port company, or infrastructure play, which is winning a lot of Middle East orders. So based on whatever other names you may figure out, the story is going to be that if you want to play India story, large caps is going to be one. Now, when you want to buy large caps, be it technology today, both the results have surprised the market and results are stable. So looking at all those aspects, Reliance fitted the bill. Most of the market participants were tired because the elephant had not danced for long. And the elephant needed to dance, and that's the market got halted, but Reliance started playing wonders on the market for last 2 days. Can 2024 be the story of 2 more listing after Jio Financials? It's possible post-election, maybe around AGM. Shareholders are waiting for last 2 years to hear the good news of hive-off of Jio as well as retail. Second side, it is bound to happen, but how soon that we don't know. Does the new division of energy, that is hydrogen, solar combination, solar backward integration from polysilicon, sand silicon to modules and hydrogen integration, how big that story emerges. The new gas field has started producing on a very good note, and looks like the current quarter will also have a surprise. Second thing, if you look at the oil and gas and oil and marketing division and the petrochemical, the division had a huge contribution. People were neglecting this sector from a valuation perspective, ascribing 600 to 800 rupees a share. But the kind of profit they have been generating, with specifically diesel exports, Europe being short, demand coming from world over for Reliance to produce, and they have been producing well, 2 million barrels a day. 3.2 per day, and 20 million tons throughput per quarter. It seems that the divisional profit of oil and gas also will have a very positive impact on the stock, and this would be one division along with oil and gas, throwing so much of cash flow that Reliance's debt will start coming down over a period of next 24 months, despite big capex which Reliance has announced. So looking at all those aspects put together, the EBITDA, profit before depreciation, interest, tax on a consolidated basis, which is nearing 45,000 in the last quarter. On an annualized basis, this year should end around 1,80,000 crores, and one should not be surprised for years to come. In next 2 financial years, we have 18-20% growth on the EBITDA level, with contribution coming from higher from retail, where margins are low, but the kind of footprints they are emerging with, telecom 5G rollout is over. So consumer division play will have a higher valuation. The integration along with oil and gas will throw up a better valuation. So, if you have patience for 12, 24 months or a little larger, a story, one among few, you need to have a little weightage and have patience. Hiccups with markets always come, whether it's led by Fed or elections or whatever. But it's a story that India consumer play, India telecom play, or you want in oil and gas or a commodity, or India industrial play.
Sure.
You can't miss out Reliance.
I think, and viewers, Sushil's answer gives 2 things. One, EBITDA, and most brokerage notes that came out, speak about EBITDA doubling in the next 3 years on the retail side, 24 to 26. Sushil mentioned about how retail footprint is increasing. And the other thing is what our producers just showed. The last 1 year, at any point of time, Reliance has delivered less than 15% return. It's a stock that really hasn't moved. Can it now move now that 5G monetization might be up the anvil? Sushil, I'm asking you to not necessarily give me a trading opinion, but wear a tactical hat. Let's assume that the 2-year, 3-year call on Reliance is a given. It could do well because of 5G retail, so on and so forth. Can it tactically, because it's not rallied too much, give a short-term up move as well, now that a lot of other sectors have already done their bit in the last 3 to 6 months?
So the current momentum may continue for a few days. Whether it's larger compared to where we saw in last 2 days, that needs to be based on the market outlook, and looks like with other sectors like technology results and maybe banking coming with HDFC surprises the market. Nifty range is a little higher than where we've seen on the recent peak. Possible. Reliance result is coming next week, and possibly legs may be there, but thing is that the kind of profits which so many companies have made for participants and the retail investor base increasing so much, everybody would put a certain allocation towards Reliance via mutual fund or direct. So the market cap of 18 lakh 40,000 crores of yesterday, a 5% move or a 10% move, I'm not speculating on, but take a 1 year, 2 year, 3 year call. One is bound to benefit with the entire expansion, and what Reliance has achieved in last 1 decade, 10 years, they are likely to achieve at a much faster pace, which Chairman has already highlighted in AGM and various press meets and various Vibrant Gujarat to so many other new initiatives they're taking. So it's a good play. Only thing is people need to have patience, because a large company can't move like a mid-cap. It has to catch up with 3-5% move. Maybe in a quarter you get 10-15% move at times, and some good news on demerger or some better prospects, or maybe some sovereign fund puts in further equity in one of the division. One doesn't know if Reliance wants to take or not. They've done a reasonable amount of dilution in COVID, and even recently some small investment from the same shareholders repeated. Looking at all those aspects, it's a good proxy for India play, and if you want India's growth momentum story, one has to participate. There's no choice left for investors, and specifically the large FIIs.
Sushil, this is great proxy play for India, like you said, but more importantly, it's also the last one moving up. Is this now part of a structural change in terms of stock movement, A? And B, do you think we're now done with the overhang on Reliance Industries, and a large part of that is already in the price? That, and also lastly, if you've got a target on RIL over the next year or two.
Samina, one should not look at Reliance from 2-day or 5-day movement or a 5-week movement. If I have to take a play on Reliance now, because the first story of Reliance was starting from petrochemical and oil refining. They came into telecom, retail, now the new division of hydrogen. So there are surprises with new initiatives being added on everything on a yearly or 2-yearly basis. The capex cycle from the current businesses have peaked, and maybe hydrogen becomes a bigger story than what we know today. Only thing is how effective green hydrogen they are able to make at what price. Will it be $2? Will it be $1? One doesn't know. The vision of Prime Minister Modi is to India to become a hub for hydrogen export. Can Reliance and few other groups do the initiative, and some of the engineering giants which are making strides? One needs to watch out, because there's very limited knowledge from a perspective of new initiatives being spoken rather than few chairman statements and here and there. People need to have a vision that is Reliance transforming from an old oil and gas and a petrochemical and a polyester company to a new initiative. Yes, telecom has done it. 5G has shown the roadmap. Retail is showing the footprint, and the consumer experience like an international destination is visible in city of Mumbai and possibly pan-India over a time. No doubt there is scope for improvement, but everything from unorganized is getting organized at Reliance. And same may happen in hydrogen. So if you take a 18-20% compounding for a large cap like Reliance over a 3 or 2-year period,
right,
it may give you a return which is better than some of the large caps which everybody tends to trade with.
Right. Sushil, would have loved to chat with you longer, maybe a little more in-depth conversation on the oil and gas pack, because from what I remember, you tracked that too very closely. Hopefully sooner than later. But thanks for joining us. Have a great day and a great weekend. In the meantime, beyond your IT names, there'll be a whole bunch of other names to watch out for in today's trade. Harsh is standing by with a list of that. Harsh, what do you have on your radar beyond Infi TCS, which you already talked about?
Well, yes, absolutely. So let me start off with Polycab. That one was in focus yesterday, 20% lower in trade yesterday. Now, what the company has released in terms of a statement is they've not received any written communication from the Income Tax Department regarding the outcome of the search. The Finance Ministry statement has not suggested what which company they are referring to when it comes to the release that they've pulled out. Also, they continue to cooperate with the IT department while search proceedings are on. No material adverse impact on the financial position of the company is expected. These are all 3 or 4 key statements coming out from the company. Now, yesterday there was also a block on this particular counter. Small cap World Fund Inc. sold 8.5 lakh shares, 0.5% plus of the company being sold off via that bulk deal. Quickly moving on, sticking with block deals, we had Sami Hotels. Aditya bought in a 2.3% stake, 50 lakh shares of Sami Hotels. That one will be in focus today on the back of that. You also have the likes of Bansali Polymers. They got environmental clearance from the Rajasthan government for expansion of certain 2 types of resins. One is the sand resin and one is the ABS resin, both of which are part of the Sirohi plant. Capacity to expand expected from 2026. Capacity infra projects, that one QIP is what's keeping it in focus. 200 crore QIP, 251 rupees a share is the QIP price, 12% discount to yesterday's close. TARC Limited in focus as well. 1.7 million square feet of luxury residential project is what they've won. Gross development value is expected to be 4,000 crore. Mind you, this is a 6,000 odd crore market cap company. That's a substantial win. With regard to last of Tata Power, 10,000 megawatt renewable energy projects across the state of Gujarat, MOU signed. So all of those in focus.
Okay. Watch out for these. Thanks a lot for that, Harsh. Ugrow Capital is the other one that could actually also be the stock in focus because of the kind of update that is given. But I want to start off with Polycab with both our guests, Akshay Bhagwat, Senior VP at JM Financial Services, and Sunny Agarwal, Head of Fundamental Equity Research at Sbicap Securities. Now, we'll talk about Polycab, we'll talk about the tech pack and all of these. Let me start off, or maybe we need to start with the index first, maybe. Akshay, quick thoughts on the index, very quick though. Nifty or the Bank Nifty, or Nifty IT, are you trading any of these 3 today?
Good morning, Niraj. Well, Nifty, it's been a consolidation range. The range is pretty evident, 21,500 on the lower end and 21,800 on the upper side. Buy support, sell resistance. That's how the January series has been working. So again, from the support, we have seen a good recovery. Nifty should take the lead over the Bank Nifty. That's my thought. So I'd be more keen on the Nifty index. Currently, as it trades, there is a good chance it may again revisit the upper end of the band, which is around 21,800.
Okay, so Akshay believes he wants to trade the Nifty as opposed to the Bank Nifty. Now, can't not talk about IT, and then we'll talk about Polycab and some of the others as well. But let's start off with IT. Sunny Agarwal, welcome to the show. Based on what you've heard from both the managements and the numerics that you've seen there, are you going out and buying into TCS, Infosys, or any of the other IT names maybe? There is an initiating coverage report on Coforge this morning from one of the global brokerages as well. That too could do well. So are you doing anything in IT this morning, presuming there will be a bit of a gap up on some of these stocks?
Yeah. Good morning, Neeraj, and thanks for having me on the show. First of all, yeah, definitely IT results were, again, I would say slightly better than expectation, especially on TCS front. So for TCS, the margin expansion has come as a pleasant surprise, especially in the current benign environment. And the commentary from both the Infosys and TCS on demand environment seems to be in line with expectation. So there is no material change as far as pricing pressure is concerned. However, the demand, whether there will be a good uptick in demand, that will be clearly, there will be a clear direction after a quarter or two. But having said that, one thing is clear that now it seems that it is discounting that at least the low double-digit earning growth for companies like TCS and Infosys between FY24 and FY26. So maybe a kind of 11 to 13% kind of earning growth can be seen, especially in the light of a single-digit earning growth in FY24. Now, in terms of strategy, whether one should add these stocks in portfolio, so what I feel is that still, on valuation front, definitely there is a comfort. So Infosys trading at close to 23, 24 times 1 year forward price to earning multiple. TCS trading close to 30 times 1 year forward price to earning multiple. So not much downside as far as risk reward is concerned. In terms of upside, if somebody is adding this stock to the portfolio, one need to keep in mind that one need to keep the expectation in terms of return slightly subdued, and one can expect a return of maybe 12 to 15% over the next 12 to 18 months. So don't expect that companies like Infosys and TCS will deliver 20-25% return from the current level. So what I would suggest, better to wait for some correction. Buy on dip is a strategy which I would recommend to go in a large cap IT name. As far as mid-cap IT names are concerned, definitely we are expecting that the numbers there will be pretty robust, especially on ER&D front. So companies like KPIT, for that matter, Cyient, or Tata Technologies, although trading at a slightly expensive valuation, there we are expecting that numbers will be relatively better. And that is the space to be in if somebody is betting his or her money in IT sector.
Okay, well, and you know, KPIT and Cyient were recently upgraded by one of the brokerages as well. We need to slip into a very quick break. We'll talk about the tech view on these, technical view on these tech names, post 9/8 maybe, because that's when the stocks would have shown what they will start off with. Slip into a quick break, come back with more. Okay, back with India Market Open right here on NDTV Profit, and some news that we saw on the PTI this morning. HUL distributors might or have started upping the ante when it comes to the margins that they earn on distribution of HUL products in particular, maybe some others as well. The All India Consumer Products Distributors Federation, which is an umbrella body for distributors, has raised concerns over this new margin structure that HUL has introduced. Mr. Dhairyashil Patil, he's national president of this federation, joins us right now with a very quick perspective. Mr. Patil, thanks for taking the time out. Tell us what's happened. More importantly, is this starting off with one product, and can this morph into more products as well? Or do you believe negotiations with HUL are on and some resolution might be in sight?
Good morning, Niraj. Yes. See, this has been triggered because of the HUL has reduced this margin by 60 basis points for the distributors coming from October. As we know, the industry itself and the market itself is struggling to make the ends meet, wherein we are seeing a downturn into the consumption is very steep. FMCG companies are finding it difficult to meet their results. And what is making this company to realize that they can make the distribution network, which is covering the entire part of the country so efficiently, to reduce their margin and make them run more.
Sure.
See, this has raised the question of the entire viability of the distributors. Just can you imagine that in 3% of a base margin, can any business run with a particular infrastructure
it's
already
difficult.
been invested?
It's difficult. Mr. Patil, I assure you, we will do actually a detailed conversation a bit later, but we're very close to market open. So for now, I would love to be interested because of the essence of viewership and what people want to know is what is the outlook ahead. I understand the concerns, but what is the outlook now? Are you in conversation with HUL? Is this for Maharashtra or all over India? And can this morph into more products very, very quickly? Because I believe you started off with one product right now.
Yes. See, we are trying to reach to HUL, but God knows what is stopping them to talk to an organization which is raising concerns of the distributors.
Of course. So, okay, you're trying to reach out to HUL. Appreciate that. And like I said, I assure you we'll talk to you more about this, but because we're very close to market open, just want to make it quick.
This will surely go to Pan India in a week's time.
In a week's time if HUL doesn't respond to your demands and concerns, right?
Yes, because the sentiment with the distributor is very bad.
Okay. My final question, sir, is this, it started off with one product. You reckon that if the response doesn't come in, more products will come into the fold of getting boycotted by the Distributors Association?
Yes, we will be ending up in a month's time if the company does not respond in a positive way. We will be surely looking into that option.
Okay, so one product right now, in a month's time, if they don't respond to you, maybe more. I'm sure they'll respond to you, Mr. Patil. And I'm sure that conversations will happen, which will probably aid both the sides. But no, I appreciate this, Mr. Patil, and thank you for being appreciative of my timelines as well. We will talk more about this in order to get the right perspective. Thanks for taking the time out and speaking to us this morning.
Thank you, Niraj.
That's Mr. Dhairyashil Patil of this federation. Now, Samina, it doesn't seem to be that big an issue right now. It's one product. They've approached HUL. HUL probably will get back to them. But if it doesn't, then, well, it presumably will be a blow of sorts to sales if indeed products are boycotted.
And I don't think it's going to go that far, to be honest. Sentimentally, though, you might see a little bit of a reaction on the stock this morning. We are at pre-open as we speak. HUL is actually not looking too bad in pre-open trade. But a quick check on how the Nifty is set to open up this Friday morning. It's looking very, very good. Unlikely it's going to be as good. 21,800 doesn't seem too likely. But nevertheless, you will be getting a gap up on the index. Tech will lead the way. Bank Nifty hopefully should follow suit. A bunch of big earnings as well lined up from the banks next week. So there'll be lots of cues and triggers to watch. There you go. HDFC Bank 2.5% higher. I'm not sure what that stock is getting so excited about this morning. iBank is up 1%. But Infosys, if I can get Infi and TCS, that will be helpful to identify. Okay, 5% on Infi in early trade. It's going to be very certain that it will follow on the very close to on the toes of what happened to the ADR. TCS also up 3%. Akshay, I'll come back to you in terms of what we are expecting as we are gearing up for trade this morning. I'm not sure if Niraj took your stock picks, and did you talk about Infosys, TCS? Infi, Akshay, let's start with Infi. ADR was up 4%. Pre-open, the stock is up 4%. TCS is also indicating to a 3% start. And I'm sure the euphoria from Infi to TCS will spread to the broader IT stocks as well. But first up, Infi, TCS, if you get a pop-up this morning, would you still buy?
Good morning, Samina. Yes, in fact, the surprise element would be Infosys. In fact, I was really surprised because yesterday before the result, there was a lot of short build-up in Infosys, especially the option segment. There was significant call writing at 16,000 strike. And just a minute before the closing, there was suddenly from day low to day high, that's what the move was in Infosys, which caught everyone by surprise. And so it's a surprise opening, and a lot of shorts surely are going to be caught on the wrong foot in the opening trades. That might lead to strong short covering in the futures and option segment. So Infosys will be from the IT pack, that's the stock to keep an eye on. Short covering can easily take this stock somewhere near the 1600 plus mark. So Infosys should be on your buy watch list. And also TCS, here the results are good. The positioning was positive ahead of the results. And even the technical setup is definitely very strong, suggesting upside till 3900 to 3950. So I'll be keen on having both these IT names on my buy watch list as the day starts.
Very quickly, how did you read Infosys? And right, I believe we've done that. Neeraj, you want to come in?
No, I just thought, so while Sunny gave us a view on Infi, TCS and the IT names, what we haven't spoken about, Samina, are one, stock picks from Akshay, which we will do, but two, Polycab as well.
Yeah.
I just wanted to bring in Polycab if you're okay with it.
Polycab. It is in an F&O ban, remember that.
Yeah, so it's the F&O ban, but the idea about Polycab is that the company's given a bit of clarification, as Harsh mentioned. And if you just look at the trading pattern yesterday, there was some serious delivery-based selling that happened. But it likely could be starting off positively today. Now, Sunny, a fundamental view, because it'll be wrong to ask Akshay for a technical view. Charts may look very, very different in Polycab because of the fall that's happened. But fundamentally, Sunny, would you go out and buy what has been a quality company thus far, involved in news which I at least can't figure out, makes it a big corporate governance concern or no as yet?
Yeah, Niraj, definitely. I think there is a lack of communication from company side. That is what I get. I mean, this is the first time I am seeing that on PIB website, IT department rate details are being shared, and then companies refusing that allocation. I mean, there is still no clarity on what is happening over there. But having said that, the numbers which are in front of all of us, I think 1,000 crore under statement of sales over the period of 5 to 6 years on annual top line of 16,000 crore. I think it's a minuscule number. But having said that, definitely it's the premium which the company was commanding because of corporate governance that has gone away. And right now, in terms of valuation, now the company is trading close to 30 times price to earning multiple, which earlier the company was commanding a premium valuation and was trading close to around 45 to 50 price to earning multiple, obviously backed by a strong earning growth. So I remember the company has guided that very soon they will be crossing 20,000 crore top line in a span of 2 to 3 years. So basically, we all know that P constitutes of two things. One is price to earning multiple, which is a multiple of earning, and one is the perception. Obviously, the perception was very strong prior to this development, and now I feel it will take some time before this perception will again before the street gain confidence on the business. So lack of communication from the management. I think management should come and clarify exactly what is happening over there. Now, my worry is that since Polycab is denying that they have not got any notice, is there some other company which IT department is talking about? I don't know. I mean, so there is still in terms of fresh position, obviously I won't like to catch a falling knife. Let the matter get settled, and probably then post that I will take a view whether I should enter the Polycab or not. But obviously, again, as per the data availability, I think business is still robust, leading cable and wire company, delivering solid profitability. Let's see, I mean, what the clarification comes from the management, and what exactly is the penalty, or what is exactly happening as far as tax demand is concerned.
Yeah, and that's well said as well. But as the pre-open rates are settling down, Polycab is just about 1%. Remember, there is no V-shaped recovery as yet. I think that happens when there is a clarity coming in from the department or a stronger communication coming in from Polycab. Thus far, I think Sunny is right that we haven't seen any material communication. Maybe there isn't a locus standi for the company to do that until they actually get the clarity themselves.
And also just being in the F&O ban will also
will probably help.
will probably help the fall.
Yeah,
but that's probably why it is stabilizing. I don't know whether the markets would be still taking too much from this. And also, I think, Neeraj, the bigger worry here is not just what's playing out on the front, is the fact that they're going to be penalized even if they eventually don't turn out to be as guilty as the street expects it to be. You're going to have to make provision for the penalty, the difference in the tax that hasn't been paid, and the interest on that will keep rolling in as well.
But just that the company is saying that we still haven't received any communication, so it'll be interesting to see finally what happens. And as Sunny said, I'm sure it is, from whatever little we figured out, it's Polycab's thing.
It's not a notice, it's an inquiry as it still stands.
Yeah, but let's see how it comes up.
Well, let's move on from those stocks. A whole bunch of other ones that we're tracking. Akshay, while we're at it and talking about index play, do you have a call on Reliance Industries? It's been smart over the last 2 days, but this morning it's again taken a backseat. Would you use that opportunity to go long on RIL?
Yes, on the price chart reading, definitely RIL has given a very strong breakout. It's at its lifetime highs, and this breakout came a couple of trading sessions back at the level of 2620. So that's a very strong support base, which will eventually set up. That's my belief. A bit overstretched for comfort for a trader, but still the momentum should be strong. It's the momentum which you chase in such markets as we are currently. And I still bet that from the current level of 2720, where it closed yesterday, there are still 30-40 more points to go before you see a cool down phase. So yes, you can participate as a trader. If you're holding this, hang on to the trade. Still more gains to go in Reliance Industries.
Okay, now the other one in focus is HDFC AMC. Can we bring up that stock price for just a minute before I go across to my colleague Mahima? HDFC AMC is starting off about 1.5% higher. Now Morgan Stanley has maintained the equal weight rating on HDFC AMC this morning. But more importantly, there are some interesting comments that they have made with regards to the near term. Mahima, tell us about the key stance of Morgan Stanley with regards to HDFC AMC stock.
Right, Niraj. So as you rightly mentioned, they have maintained an equal weight with a target price of 3,000. Now, yesterday, the stock has already crossed the mark of 3,500. However, as per their report, they've raised the target price from 2,800 to 3,000 and maintained an equal weight. They've said that they're trimming their estimates for FY24 and FY25 for their EPS driven by higher tax rates. They've also mentioned that AUM forecast for the near future remains high on sustained growth of SIP inflows and stronger markets. They also raised the target PE price target to reflect near-term momentum and sentiment of the markets. They remain equal weight given the structural pressures that is at present there on the equity yields, and they are expected to have a low double-digit growth in the long-term EPS CAGR. So this is the overall key highlights that the report has on HDFC AMC.
Okay, thanks a lot for that, Mahima. You know, the other thing that they mentioned was that the AUM forecast will be good, but they raised the PE to reflect the near-term momentum and sentiment. So that's the key thing. Akshay, the stock has done really well in the recent past. Before we take your stock ideas, a word on HDFC AMC or any of the other capital market players. There is Angel One, which has done well, Anand Rathi Wealth, which has done well, 361, which is doing well, JM Financial, not too bad. Do you like anything here?
HDFC AMC is the stock to bet on because there's where the momentum is. Almost a V-shaped recovery as I see on the broader term charts. And the chances are very high that it's heading for its all-time high levels, which are around 38.25, which we saw way back in 2019. So momentum is very strong, technically a very firm setup, and 38.25 is the target you should be gunning for in HDFC AMC.
Akshay, a few minutes to go as we're gearing up for opening. Beyond the stocks we've talked about, any other top recommendations for the day on the long or short side?
Yeah. I have a couple of recommendations, both on the buy side of trade. The first one is multi-commodity exchange, MCX, which has been a kind of a multi-bagger in the last couple of months. It's taken a breather in the past few trading sessions, but I believe it's gearing up for another round of an up move. Buy MCX at the current rate, keep a target of 32.87 with a stop loss of 30.87. And the second trade here is in Deepak Nitrite from the chemical space here. Again, a very strong technical setup. Breakout is done and dusted at 2400. Again, consolidation setting up for a launch. Buy at current rates for a target of 2542 with a stop loss of 2425.
Okay, the stars this morning will be Infi TCS. Akshay, I'm forced to ask this to you again. They're starting off higher now. Is there a trade after this 3% and a 4% up move on Infi and TCS?
Yes, Niraj. I will be keen on both these IT names, especially in Infosys. There are a lot of short bets because the expectations ahead of the results were a bit soft. They were negative. Even the data positioning was negative. And as I mentioned, shorts will be caught in for a very rude surprise on the opening. So there's going to be a lot of short covering in the opening trades that should propel the stock. So Infosys, yes, it should be a buy on the trading front and also from a positional perspective. TCS, well, the numbers are also good. The positioning was positive, so it should be on your buy watch list. So both these IT names very strong, continue to buy, and there is still more strong potential upside, which I foresee in both these names.
So I might add. Right. We'll come back to both of you very soon. Just quickly address market opening as well. You've got about a minute and a half. But Sunny, very quickly, we still have 30-40 seconds to go before I hand it over to Niraj. You have any stocks that you want to put on your buy list, tactically, not strategically, of course?
Two stocks which are on my buy list. One is Steel Strip Wheel Limited, SSWL, one of the India's leading vehicle remanufacturer in India. And the trigger is that the company's new plant is going on stream in the quarter 4, which is the Jan to March quarter. And FY25 is a year where I see a big uptick in earning in terms of the business for this company. So SSWL is one of my pick with an upside potential of 20% over the period of next 6 to 12 months. And one company which I like from infrastructure space is Welspun Enterprises. Again, a decent small size company, 9,000 crore market cap, making 200 crore profit, 3 times sales to order book ratio. And what I feel is that the profit of this company is likely to double over the period of next 2 years. And they are specializing in water infrastructure and road segment. So 65% of the order book is from water and 35% is from the road. And recently they have acquired one.
Sunny, allow me to come back. But Steel Strips and Wheels and Welspun, we'll take a detailed view on Welspun after the market opened because the markets are just opening. Watch out for IT at the top end of the heat map. But we start off positively, I'm sure. 0.5% higher, 21766. Pull up the Nifty IT and then the Nifty Bank, or vice versa, doesn't matter. But Nifty IT, 3%, strong move there. 50% of the weightage is moving, and that's the key thing. Let's get the heat map straight. The Nifty Bank is okay. Let's get the heat map straight and just show you what TCS and Infosys at the top end are doing. 4% up for Infosys, TCS up 3%. It's pulling the others along with, because if you look at the top 5 names, or the top 6 names are IT names, LTI, HCL Tech, Tech Mahindra and Wipro. It's an IT morning. Splendid show by the IT majors in this open, and it's kind of masking the slightly dull showing by Reliance this morning because it's starting off lower. Remember that, viewers, Reliance. The good part is that HDFC Bank is not sulking, and that also could be helping. SBI, in fact, at 1/3%. But frankly, if I look at the large caps before I hand it over to Samina, it's what's happening at the broader end of the spectrum. There's not much to talk about, but these names. And I'm guessing Samina would be highlighting Polycab, but I just want to take 10 seconds and bring up the stock price of Polycab here and show you what that one is doing. Samina, I'm sure we'll highlight it. But hey, yesterday's big mover on the downside is starting off reasonably okay. Maybe buoyed in part by the clarification by the management, but also because, Samina, it's indefinite ban, as you said.
Yeah, it's not. It's going to be a long journey on the way up. Remember, it's wiped out quite a large quantum of money. Mutual funds have lost around 900 odd crores. FIs have lost about 1,900 crores in one day. So that was a one-day crash that you had on Polycab. But Niraj talked about how the day belongs to IT, and it really does. The reporting from Infosys and TCS has also meant the broader IT stocks are doing really well. So HCL, Wipro, both will report earnings today. Both those counters are actually not doing too badly. You've got both those stocks up 2.5% and 1.5% on HCL Tech, and Wipro is up 2.5% as well. Well, let's take a look at a few of the names that we've got. Nykaa, if we can pull that one up, there should be a block deal, a fairly large one, 460 odd crores. Nothing's happened just yet, but the stock is going to be on the radar on back of that. Vedanta, after Moody's yesterday, it's S&P today. Another downgrade coming in for Vedanta. It's not going too well. The stock, though, being very mature in terms of its reaction, marginally lower in today's trade. Ugro Capital, solid numbers there. The stock gets a thumbs up. At least that's what it was doing in pre-open trade. Not doing too well, but of course 2.5% gains is what we're seeing, little less than what pre-open was indicating to. HDFC AMC continues to rally up, solid numbers, brokerages seem pleased. Oh, actually no, it's not doing well anymore. It did see a gap up but has got sold into. Remember, the stock gained 3% in the last hour of trade yesterday, given up most of that. In fact, now trading with a cut of about 1% odd. Talking about HDFC and capital market players, you've got Anand Rathi as well that will report numbers today. The stock will be on the sidelines. in today's trade. Neeraj, so it's okay, and that's a quick update. Nykaa has had 2.64 crore shares that have changed hands. This was what we were expecting. The deal has already taken place. The block deal on Nykaa was an update. Safari, I'm going to mention that very quickly. They've got a board meeting Monday to raise funds. On back of that, maybe you're seeing some activity on Safari. The stock does trade with a gain of 1.5%. Nothing today in terms of news flow, with the count, of course, gearing up for that board meeting. Neeraj, it's a day of IT, but it's not. While the front line is doing great, broader market IT is also doing well, but no runaway rally there.
And I think that's the point, Samina, that it is an IT day, not a runaway rally, but look at what's happening to the Nifty 500. If you look at the BSE 500, peppered with gains to IT names. Cyient 3%, Mastech 3%, Infosys 2.5%, Birlasoft about 2.25%, Coforge is up about 2% as well. So it is an IT day today. Though I must mention, Zomato is not far behind, 2%, nothing dramatic, but Jefferies has upped the target price of Zomato to, I think, 190 now, from 165 odd earlier. So 141 for Zomato. Persistent, OFSS are the other IT names which have done well. It's happiest minds. I can't take my eyes off IT. So that's the set of stocks which have done really well at the broader end of the spectrum. Just very quickly, before we get our guests in for their opening thoughts, just want to mark what's happening on the losing side as well. So MRPL is down 2.5%. The big winner of the last 2 days, Network 18, is down about a couple of percentage points as well today. Apar Industry is about 1.25%. Nykaa, Samina already marked that. And there is some bit of weakness in a couple of other capital market plays. 361, for example, is down about 1% as well. So these are a few stocks at the broader end which have come off, but it is largely an IT day. Infosys is now topping 5%, if I'm not wrong. Akshay Bhagwat mentioned that he will be happy to buy. Okay, Nifty IT is up 3. Now, can we get Infosys, please? 5.18%. And that is what is, Akshay mentioned that he would be happy to buy into these stocks even after they open up a gap up. But now it's 5.2%. Akshay, for somebody who missed your call at about 4% higher to buy Infosys, but he's excited about IT. What within this IT landscape looks more promising? Is it still Infosys, or are there other IT names?
See, IT is going to be the theme if you are a day trader, even if you are taking a carry forward bets, because now HCL Tech and Wipro is what's on the line. And the start has been good from Infosys and TCS, which just sets up the tone for the IT pack. Here are a couple of IT names which I would have based on their technical parameters. One is Persistent Technologies. That's a very strong setup, currently trading at 7577. That has still more legs, still 3 to 4% upside as I see. And the other trade here would be Coforge from the IT pack. So Persistent Technologies and Coforge both have a strong technical setup. A breakout is already done. The momentum is in. IT sector is leading. So you can't ask for more. So these two stocks should be on your watch list if you further want to participate in the IT pack.
Even HCL and Wipro, those two will report numbers, looking fairly excited in morning trade. A quick mention, we saw this in trade yesterday as well. Railway-related stocks have been doing quite well, and today is no different. So while IT is grabbing everybody's attention, it's definitely worth a mention. IRFC is one of the big gainers in today's trade. So that's IRCTC on your screen. IRFC has added about 4.5% yesterday, building onto that this morning as well. Rail Vikas Nigam is also seeing sharp gains. Titagarh Wagon, Rights, Container Corp, Railtel are all trading with a very clear positive bias. Finolex Cables is also looking pretty good actually in today's trade. So big volume moves coming in on that counter as well. But yes, like we've reiterated, it is all about IT, but these are the other smaller pockets that you're seeing some interest in today's trade. 5paisa reported disappointing numbers. Of course, when I addressed it in market opening, it wasn't doing as badly. Right now, a pretty sharp cut, 6.5%. So markets don't seem very pleased with this one post its earnings reporting right now. Well, along with that, Nazara Tech is having a good day. You've also, in fact, Nazara Tech is turning out to be quite a mover. 4.5-5% on Nazara Tech is what we've got. So all those counters is what is moving the markets. Sunny, we've already talked enough about IT, but I guess we do have HCL and Wipro right now. And now with how you've seen these stocks open up in trade, and we actually have numbers to back that up, would you be brave enough and pick up HCL and Wipro right now?
So what I would like to wait for the numbers to come out and before betting my money on any new IT name, especially when the numbers are due today for HCL and Wipro. Obviously, on valuation front and on a relatively growth perspective, I think HCL Tech is better placed amongst all these large peers. So we like HCL Tech, especially looking at a decent growth outlook and valuation. But having said that, I would like to wait for the numbers to come out today. One small IT company which we like is Esalia Kale. So that's a play on again travel industry on airline front. So company has not been able to grow, but however, if you see the profitability number, the quarterly PAT of 30 crore, annual PAT of around 120, 130 crore, trading at 2500 crore market cap. I feel that is the company where one can find comfort in terms of a risk-reward ratio, trading at around 1500, 1600 rupees as of now. And that company will definitely, I would like to keep that company on radar, especially from earning growth perspective also. And their valuation is slightly comfortable if I have to bet my money in one of the IT companies.
Akshay, any trades that you've picked up on beyond IT in the last few minutes that may make good trades for the day? Akshay,
it has to be Wipro. The results post-market, I believe, technically it's very strong. It's the momentum is caught up again from the support zone of 450. IT is the way to go, and I think ahead of the results, the top bet would be now on Wipro. At least for day trading, easily you can see levels up till 467 to 470. That's what I presume. Support is 450. Continue to hold, and if you want to take a bet for the result, yes, keep a stop below 450, and you can carry it forward.
Sorry, you wanted to ask something? No, but Sunny was recommending two stocks. One was steel strips and wheels. The other one was Welspun, which we didn't get a chance to understand in detail. Sunny, why Welspun?
Yeah, so Welspun Enterprises is a play on infrastructure. Currently, the company has got an order book of around 9,100 crore. And 65% of that order book is from water segment and 35% is from the road EPC segment. At the same time, the company has acquired a 51% stake in one of the, that's the name of the company, Michigan. And there the company is specializing in micro tunneling. And there also the order book is robust, 1,600 crore. And right now the company, the top line of the company is in the range of 2,200 crore and generating PAT of 200 crore PAT. Trading at close to 15 time price to earning multiple. And what we believe is that in next 2 years, the profit of the company is likely to double. So we are expecting the profit of the company to be at 400 crore levels in FY25 and trading at a reasonable valuation. At the same time, company has shown its intent to foray into the new energy business. In addition to that, they have got some oil wells also in their kitty, which is likely to get commercialized in FY26. So I feel this company can be on radar from a medium to long term.
Very lastly, Akshay, before we are completely out of time, some of these railway stocks have been doing quite well. IRFC, Rail Vikas Nigam, IRTC, REITs, of course, those are the low-hanging fruits, but the ones that are leading the pack today is IRFC and Rail Vikas Nigam. Anything in the rail pack that you would trade on?
IRCTC, that's the top bet I would have. It also has exposure in the futures and options space. Clear breakout done. Railway theme is working very well. And I think IRFC is possibly heading for targets of 1050 on the technical charts. 900 is a very strong support. And RVNL is the other name here I would like to highlight. Again, a very strong technical setup. 204 is the current rate, mostly heading upside for targets of 430 plus. The support is around 195, and this is the another rail stock to bet on.
There are a few other stocks as well that are worth mentioning. But thank you, Akshay, thank you, Sunny. It was great having both of you on the show. We'll just quickly continue checking onto the markets. The Nifty is looking good with a 0.5% gain. 21,730 is what we have on the benchmark. About 0.4% higher. While the breadth is not looking very promising, like we've said, apart from IT, everything else, or most of everything else is looking subdued. You do have big moves coming in stocks like Infosys, TCS. We've discussed that over and over. Wipro as well seeing a gain of 3%. Tata Consumer Products is seeing a sharp gain of 2.5% at record levels. L&T is marginally higher. It is in the broader markets that we are seeing far more activity. So we have Mastech, First to X Solutions, Infosys, Minda, Coforge are some of the names that are leading the way up in today's trade. But we have Agam who's standing by. Agam, TCS, Infosys option premiums have crushed, but no real surprise there, right? Post-earnings, that big move, it's part of the course.
So, Samina, we were talking about this in the morning, and we were also expecting an up move in at least Infosys. But the reason I'm standing here is because I actually want to talk about the curious movement of the option premiums that go through every time, before earnings and after earnings. So I'm going to start off with what's really happening with respect to TCS. Now, of course, it's gone into a discount, and even as the stock advances, we're starting to see a lot of unwinding and about a short covering happening because there were, in fact, a lot of shorts as far as TCS is concerned. But I want to talk about what's happening in the options market. Now, do remember that yesterday we had a significant amount of open interest when it came to the 3800 call and the 3700 put. A lot of writers had in fact gone ahead and sold those options. And when you actually sell that option, that's also taking advantage of high implied volatility, which means high option premiums ahead of that event. Once that event comes through pass, you see a significant crush in your implied volatility, and consequently you see a substantial contraction in your option premiums, and that's exactly what is playing out as far as TCS as well as Infosys is concerned. Remember, the other thing playing out in favor of these option premiums, or rather the crush in these option premiums, is the fact that TCS and Infosys are advancing, and a lot of that uncertainty is out of the way. So when it comes to Infosys as well, even as the stock advances by around 6%, we see about near 4% added in open interest in terms of its index futures. Coming down once again to its options market, again, it was largely the 1500 call and puts which was sold yesterday ahead of today's earnings. And it just so happens that if you in fact see a 2 to 3% move on in the underlying, that will not be enough so as to make for the kind of crush that you see in terms of your option premiums, which leads to substantial profitability on account of the earnings coming through and the event being behind you. So these are some of the curious things that do happen and tend to happen across the earnings season, and this is something that we felt that it was worth pointing out. That is the selling of your straddles and strangles as far as Infosys and TCS are concerned, which are playing out in favor of those who had in fact gone and short those particular strategies on both these counters.
Okay. Well, thanks a lot for that, Agam. We'll have to slip into a quick break on that note with the point that the markets are doing well, led by Nifty IT. Take a quick break. Catch the management of TCS, talk about their Q3 highlights, deal wins, order book, and more at 10 a.m. today. So watch out for that. And of course, talking point with Shankar Sharma on the other side of this break.